Hello, dear listener. I'm your host, Hike. And today, my guest is an Italian CEO of a hybrid cryptocurrency exchange. Federico, tell me who you are and what you do.
Hello, everyone. My name is Federico. I'm the CEO of Femex, which is an hybrid exchange trying to build a sort of a bridge between the retail experience of centralized exchanges and the new on-chain economy, which is developing now more and more in our industry.
What do you mean by a hybrid exchange?
Essentially, when we started in 2019, centralized exchanges worked as a closed loop in the sense that all the activity within the exchange was actually centralized, and then just the funds would be sent in and out through blockchains, right? But more and more recently, I think exchanges have to be interacting directly with the on-chain economy. So DEXs, blockchain. So now our exchange is moving in the direction of allowing users directly to trade, buy, sell on-chain. And we simply manage these interactions for them. But for the first time, I think exchanges are now actually interacting on chain on behalf of users, when before these orders were simply abstracted, right? So now these orders are actually happening on chain, since the on-chain markets have grown quite a bit since we started.
Okay, we're going to dive deeper into that. But before we do, I want to know, why do you even care? Why did you start with crypto and how did you end up here?
So, as I was doing my PhD, that is focusing part on cybersecurity, I stumbled upon cryptocurrencies as a topic. And that was when, during the first bubble of 2017-18, I found the topic quite interesting, but I realized at the time that it was kind of like a very frothy market. So I thought that, okay, we have to see if this market actually exists after like a pullback, or if this is like some kind of like mania. So after actually the market cooled down a little bit, I dug more into it. I read the Bitcoin white paper, read about Ethereum, all these kind of things. And then I started attending some conferences. That's why I first saw like people talking about Solana, Chainlink, all these kind of things. And I thought, okay, there is something here. There is a community. There is like the tech is interesting. The community is moving forward. There is people that believe in these assets. And some of my acquaintances at the time were actually working on centralized exchanges. So some of them asked me, like, do you want to start a new exchanges from scratch? And at the time, exchanges were pretty simple. So we said, okay, it's feasible. Like, we can actually build this with very little resources. And so we started with the idea of focusing mostly on perpetual futures, since at the time, this was kind of like a newer feature for exchanges. Like Phemex was the biggest exchange at the time. Binance had just launched perpetual futures. So the market was really ready to be to grow for both users and also exchanges.
Then you decided to start building Femex. Is that it?
Yes, that's when we started doing some research, and then we assembled a tech team. We collected some investment, and we launched. Since our team was a bit comprised from people from TradFi and people from other exchanges. So at the time, the idea was to make it very institutional, like grade technology, like to make it very high performance. But then we realized crypto's participants were not that picky when it comes to performance, latencies, all these kind of things. They were more focused actually on how many assets are you listing, how many coins can I trade, like how cheap are the fees, all these kind of things, which became more important as the industry matured.
When was Femex started?
So we launched at the end of 2019. So actually, like, our timing was lucky in the sense that we were able to capture the whole bull run. But at the same time, just a few months after we launched, so we had like the COVID crash of early 2020. So the whole market was about to like collapse, and like Bitcoin fell to like 3K, almost zero on Bitmex, since like there was no liquidity at all on the other books. So that was like a very significant stress test for the industry, but our exchange survived, all exchanges survived at the time, and we were able to capture the whole upside of the bull run.
And from what I understand, it underwent some big changes from 2019, right? Because you thought it's going to be an institutional thing, then it went into more hybrid approach, right?
Yes, when we started, like Bybit, they had 3 trading pairs for perpetual futures, and we had 4. So that was like the big innovation that we were bringing on the table. So the market was very new. We didn't know exactly how it was going to develop. We understood that people wanted to trade Bitcoin and use like the Bitcoin inverse perpetual future to stack more Bitcoin. So we thought like, okay, this is what people want. And that's what we need to provide for them. And that has always been like the key, the cornerstone of our business. But already like a couple of years later, the biggest perpetual future contract was not the inverse BTC, but was already like USDT margin, right? So the industry has changed a lot. And I think now people see cryptocurrencies as a way to stack USD compared to just accumulating BTC. So I think there has been like a kind of split between how people approach these markets. Some people want to get rich and just get out. And so people want to like stack BTC forever and like never sell, right? So I think we have to cater to both this kind of users. And that's why the exchange has to be a bit more flexible when it comes to listing everything that is popular in the market or volatile, even if we don't think it's that kind of a quality project.
So you ended up building, is it the only such exchange, or do you have competitors in the hybrid field?
I think we were among the first to launch this feature. I think there might be like a couple of days difference, but then I think a lot of exchanges kind of like adopted the same idea. I'm pretty sure like Gate has the exact same setup and some other exchanges that developed around the same time. I think we were the first, but some other like shortly after. I think the big like kind of like shift happened when Trump launched the token, right? Because no one knew if the token was real or not. Like for the first few hours, I don't know if you remember, like for the first 6-7 hours, people didn't know if like maybe it was hacked or something. But if you could actually like just let users trade it on chain, you had kind of like no responsibility to list it. You just said, okay, we have it. And then it's up to you if you want to engage on chain with it. And that gave us an advantage compared to other exchanges. Some people say, okay, the first exchange to list this token was Mexi or Hyperliquid, but in fact, we had it before anyone else because we had it on chain. So our users were actually able to access it as soon as people on Jupiter or whatnot.
I remember the first time I came about Gate and I was just testing some stuff. And when I tried to register, they had the opportunity to do it with Telegram, like an Apple ID, MetaMask, email. And at that time, it was maybe like 2-3 years ago. It sounded crazy for me to be able to register with your TG on a centralized exchange.
Yes. Yeah.
But yeah, sure.
I think in this regard, centralized exchanges have been kind of very forward thinking compared with other like institutional like financial apps that you can find on the Apple Store or whatever, because I think we know that we have to deal with a very wide variety of customers. So we know some customers will want to sign up with MetaMask, and others will want to use their email, which is fine. Some others never use maybe a centralized exchange, but they just use like Phantom or whatnot, right? So you have to cater to this wide variety of users, and you have to like prepare for all of them. Yeah.
Yep. Can you tell me a little more about a recent challenge that you faced with Femex and how did you and the team overcome it?
Right. I think one of the biggest challenges was posed by a competitor, Hyperliquid. As you know, Hyperliquid is one of the most popular products right now for good reason, because I think they have a very ambitious roadmap. The product is very high quality. Everything from the UX, UI to the trading experience, liquidity, it's all very good. And also they were very quick at listing tokens for perpetual futures markets, right? To the point that people started using it as a selling point for the product. And then, so we had to look, okay, what is our timeline for listing perpetual futures? And we realized we'd actually, like, once you really look into it, you can make it almost instant, right? It's just a matter of managing risk, having good market makers to provide liquidity and all these kind of things. And so, like, very briefly, we were able to shave the listing time from like 1 hour to just 20 minutes or even less if we really need to push it. So I think that was a good stress test for our team. And that's why I like competitors such as Hyperliquid, which rather than competing directly or trying to like push other exchanges down, they just try to compete with quality service, quality product, and that pushes the whole industry forward. I think FTX also had these kind of moments at the time in 2021, which I think were positive for the whole industry, but of course we know what happened after. So I think in that case, it's not the kind of example to follow. But I mean that it's good to have these kind of ambitious competitors in the industry because it pushes all of us to do better.
Sure. And whenever you have such a competitor, they can push you. Sometimes you succeed, sometimes you fail to compete and like get them in the race. And that's exactly the next thing I want to know. Give me a story about a fail.
Fail?
Yeah. If you want, if you can, but I'm curious if there's a fail that you can tell me about.
Yeah. So I think sometimes you work a long time on a product and then it ends up like being like irrelevant or not consequential. So at some point, like major exchanges such as Binance, FTX, and Bybit, they all launched NFTs marketplaces, right?
Sure.
So we, as an exchange, thought, okay, we cannot fall back compared to our competitors. So we started researching into it, setting up the team, and then just once we were about to like getting things ready, like the whole NFT market basically volume dried up to zero, and we realized, okay, our competitors are doing zero volume on their NFTs. So why are we like working on an essentially dead product? And so we said, okay, we just have to shelf it. But I would say that that's a fail. But at the same time, like you have to try 1,000 different things so that you land a couple of things that work, right?
Sure. I never really understood the idea of a centralized NFT marketplace, to be honest. I mean, yeah, you have users as an exchange, but the whole idea is the ownership, and how do you provide ownership if you don't have the hybrid approach, at least?
I think what would have been nice, and I don't know why this never happened, was for exchanges to connect directly to OpenSea or Blur or something like this. I think that would have been a better product. So instead of launching your own marketplace, you let your users buy NFTs on chain, but you simplify the UI for them, so they don't need to like learn how to use MetaMask, because a surprising amount of traders don't know how to use wallets, right? So you have to keep that into account. Our users, most of them, don't want to deal with wallets. So I think that would have been a nice product, but I don't think the OpenSea team was very good in that regard. Like I think they had a very like specific vision for the product, which didn't work long term. Yeah, that's just my read.
But it shouldn't have been such a problem in my head. Like, if you think about it, it's just some question of, and by the way, if OpenSea, Magic Eden, or other top NFT marketplaces, if they would have provided the infrastructure for exchanges just to connect and display their content on their platforms, that would have been a win-win for both.
Yes, that's what I'm saying. Yeah, I'm surprised no one thought about it, because now like you have plenty of aggregators that let you do it on chain, like Jupiter for Solana is the best example, right? Like any exchange can connect to Jupiter and just let your users trade there, and you just split the fees, and it's a win-win, right? We don't lose users to the centralized exchanges, and they get volume that they couldn't get directly otherwise.
Yeah, sure. Well, maybe we'll see that. Who knows?
If NFTs come back, yeah, maybe.
Well, I mean, if you look at it from the art standpoint, I believe there is some potential.
I like NFTs. I think it's one of the coolest like products that crypto produced, but I don't know why. Like, I think maybe like there was a bit too much greed in the way that so many collections launched, so many like projects like competed against each other. But I like it as a technology. I think it has a lot of potential, but yeah, maybe it was a little bit of a industry mismanagement as a whole.
Plus, there's another thing that users don't really understand: the importance of digital ownership. Importance plus the value.
Yeah, it's a concept that's a little bit difficult for many people to grasp.
Yeah, because like the main audience that really gets it are gamers.
True, and they don't like crypto.
Yeah, so that's the thing.
Which is surprising, because I mean, if you spend your whole time online, you might as well get something out of it, right? But gamers hate crypto. I don't know why. Like I on every like thread on Reddit, on Twitter, like they hate crypto. I don't know. So there are some niches in the web which just hate crypto, and I think it might be our fault. I think we must have done something wrong. Yeah.
What are you trying to achieve at this point?
So I've come to realize in the past year and a half or so that people really don't trust centralized exchanges. They don't trust centralized exchanges, and they almost hold a grudge against them. So what I'm trying to do is try to show people that not all centralized exchanges are equal, first. And second, to build a centralized exchanges that try to avoid this kind of conflict between the platform and the users, right? So the platform and the users should be aligned in the same direction. I think that's the biggest lesson that we've learned from platforms such as Jupiter, Hyperliquid. So they have shown, or even Pump.fun, right? Like this kind of platform. They show that if users and the platform believe that they are working together, kind of, there is success for both, essentially. So there is more rewards for users, and there is growth for the platform. And I think centralized exchanges really screwed this aspect up of our industry. And I think they have been a little bit too extractive when it comes to listings, when it comes to the deal they have done with tokens, how they have treated users, and their kind of like churning rate, all these kind of things. So I am trying to fix this perception and to keep treating our users well.
So you think that centralized exchanges are conservative in terms of listings? Is that it?
No, I think they are too exploitative when it comes to listing. So they will require very high listing fees. They will require a lot of tokens. And a lot of the time, some of the tier two exchanges, they will sell these tokens against kind of the market. They will short it while selling, all these kind of things. Like you have seen a lot, I don't want to name names, but you can look up on Twitter, there is plenty of examples of those kind of tier two exchanges, being very extractive against the projects that actually they should benefit from listing on the exchanges.
And is there some sort of a collaboration between exchanges? You as a CEO, do you see something like that?
No, I think it's the most competitive aspect of crypto. There is no we're gonna make it. There is no we're all in this together. No matter what you hear on or see on Twitter, exchanges are very cutthroat when it comes to competition. There is a very strong competitive aspect in both leadership and personnel. It's not like the Web3, but kind of yeah, I don't know if you get the idea, but it's kind of like a different. It's more like just business.
Yeah, I mean, when you said that it's the most competitive part of Web3, I really didn't think about it, and yeah, I can't think of anything else that can be more competitive. I mean, tokens don't really compete with each other in that sense. They're building their own things, and the only institutions or entities that you have, yeah, for real.
To be honest, maybe some tokens could benefit from being a little bit more competitive, because I think exchanges are businesses which don't rely on selling tokens; they rely on revenue, right? A lot of the tokens you still see in the top 100, a lot of them, they rely just on selling tokens. So they have no revenue, they have no real user activity. They just do conferences and just sell tokens, and that's it.
Mm-hmm.
So I think some of these projects could benefit from actually having a little bit more of a cutthroat attitude. I understand that as an industry, we should be supportive of each other when it comes to those kind of projects that also have a kind of ideological responsibility. So I think blockchains, especially, they do carry a kind of responsibility to benefit the industry as a whole. So exchanges are different. We don't have any kind of ideological responsibility to the dogma of crypto.
So in case of exchanges, it's purely business, it's competition, and whoever is able to make the most out of it. Is it?
That is correct.
Interesting. So for you, the main challenge is not the challenge, but what you're trying to achieve is to sync users and platforms and provide users with more opportunities to trust the platform, use it, and right? Is that it?
Yes, I want our users to be our users for as long as possible. They want them to keep trading, rely on our exchange for spot trading, perpetual futures, wealth management, all these kind of small products combined together, one platform, all chains, one platform, and they just are crypto users taking advantage of the full range of products that crypto offers, but they do it on our exchange.
And what's the challenge in doing that?
The challenge is that our industry moves very fast, which means that you have to provide new products very often. You have to list tokens like 3-4 tokens every day, just for the spot markets. And users are very demanding when it comes to fees, when it comes to the trade speed of execution, all this kind of things. So you have to really keep it very the execution must be very tidy for an exchange. So customer support, tech support for institutional clients, all these kind of things, they must be very well oiled, and all users must be very satisfied, or they will just leave for another platform. It's very easy to move from one centralized exchange to another. There is not an ideological loyalty compared to blockchains, maybe.
And what would you pinpoint as the top challenge at the moment?
I think the top challenge at the moment is competing with platforms that don't really have as much burden in terms of regulations as we do. So decentralized exchanges, platforms like Pump.Fun, I think they have a competitive advantage when it comes to the speed of onboarding users. You just connect with your wallet and that's it. No questions asked, right? So I think that's the biggest challenge. You want your users' experience to be as closely as smooth as what they get on a decentralized exchange.
But that's technically sometimes even impossible, because it's one thing to connect a wallet, another thing to pass a verification at KYC and
yes. But I think but the KYC process that now you can get online is, I would say, takes less than 3 minutes overall, unless there are like any issues. But generally, like, I think it's a pretty smooth experience, which compared to 3-4 years ago is like it's a huge step forward. Like now we're seeing like you can do it in 3 minutes on a new exchange without any issues, right? But if you think 3-4 months ago, like like completely different experience.
I believe you have some analytics as well, and if you can give us a little glimpse into that, like, what's the main factor that affects a user choosing an exchange? What's their main motivation?
So I think from our perspective, at least the users that we onboard most on the platform, they must, like, the vast majority of users come recommended from someone. So whether it is another user or a content creator, like a YouTuber or someone on Twitter, they say, okay, I trust this exchange, I trade here. That's the people that are most successful at onboarding users, better than ads, better than sponsorships, better than all these kind of things that you can get in crypto. You need someone to say, okay, this is my exchange, I trust them, I put my money there and I trade there. And that's it, basically.
So the main factor is trust.
Yes, exactly. Yeah, trust and a good review from someone that you consider trustworthy, whether because they are a good trader or because you know them like directly.
When we say trust, obviously it depends on several key factors like the funds managed and reserved, UX and referrals and stuff. And there are so many options at this point. And how do you even differentiate as an exchange to onboard the users that you want?
Yeah. So I think there is different layers of exchanges. So for example, let's say you trade on Coinbase, right? Like you have certain aspects that will make you feel very comfortable in the sense that they are an institutional exchange. They trade like in the stock market, right? At the same time, you know that if you need the customer support from Coinbase, they will never reply to you. Like, you know that as a fact. Like, there is people with millions of dollars in Coinbase that struggle to get a reply from Coinbase. They have to go on Twitter and post about it, right? To get like some like social media manager to ping someone. Yeah, it's like, it doesn't make any sense. So I think like if you approach a platform that big, you know that the service quality for the single users will be lower. That's just a fact. Like you cannot scale these kind of resources, right? And we have seen like Coinbase is facing issues with their customer support. Like I'm just explaining the context. Sure. I don't want to, like, I think it's a good exchange, Coinbase. And I use it. So, but the point is that not all exchanges can provide the same services, right? Because some exchanges will be too big to provide the same quality of service, whether it is one-on-one customer support or like listing new tokens quickly. Because once like a company grows the size of Coinbase, every decisions have to go through like dozens of people, right? Yeah. Binance is the same, right? And it's a good thing for them. At the same time, if you want a token that launches, like that has launched today, you cannot wait for the Coinbase listing team to decide whether this token is okay or not. You want it right now, right? So I think smaller exchanges have room to grow by providing better support to individual users and being a bit faster, like building small advantages on the newer aspects of our industry, because our industry moves very fast. And once a platform is as big as Coinbase or Binance, necessarily the decision-making process slows down.
So with them, the size is their problem because they are not flexible enough. What's the challenge for Femex in that case?
Well, the challenge is that like Coinbase sponsored the parade of Trump. You know what I mean? Okay. It's like, yeah, it's like I wouldn't even know where to start to do that. It's like, who do you talk? You have to talk with the United States government, like to get like, you know, it's like it's so far removed from what we do that is like I wouldn't even know where to start. Like if you talk about like Formula One sponsorship, you're like, okay, like yeah, you get the numbers somewhere. But how do you sponsor like the parade of the military parade of Donald Trump? Like I have no idea. So they have some advantages. If you are that big, I don't know if you noticed, like they just announced a partnership with Perplexity AI.
Yeah, sure.
A lot of smaller exchanges have launched some kind of AI products, but to get the endorsement from like a real player in AI, that's very, very difficult. You know what I mean? So exchanges that size, they have the opportunity to actually like build these partnership outside of crypto, which for a smaller exchange would be very difficult.
So can we say that the main thing for you at this point are partnerships?
No, I don't think partnerships bring that much value to an exchange when you are our size. I think once you are that big, yes, you need to do something with all that money, right? So you
Mhm.
need to like, you need to like do Formula One or football. Like you need to spend the marketing budget somewhere. But
Mhm.
for an exchange our size, it doesn't make much sense really.
Okay. Who do you want to connect with?
I hope to connect with people that want to list their token and that they have a good product. So I am happy to list anyone's token without any listing fees if they can help with liquidity and they can help with a little bit of joint marketing. That's all I ask. And then I promise we're not going to sell your tokens because we don't test them. And there is not an extractive listing fee. I just want our exchange to support quality project. That's it.
Mhm. So founders and
Yes.
token
Yeah.
owners.
Especially in DeFi. I like DeFi a lot. And I think
Okay.
I think meme coins should not be the only thing we have going on in our industry. You know what I mean? Like it's a bit depressing if it is.
Yeah. What about RWAs, by the way?
I think that is interesting, but it is the kind of thing that how can I explain it? So it sounds interesting in theory, but
Mhm.
there is not really users for it. So a few days ago, I don't know if you noticed that X Stocks launched this kind of on-chain equities on Solana, right? For Amazon, Google, Circle, Nvidia, all these kind of things, right? But the volume is almost non-existent.
Mhm.
Why? Because crypto traders trade crypto. They don't
Yeah.
trade anything else. Like the vast majority of crypto traders, they don't want almost to trade anything else because they know this market. So I think RWA has the same problem. Like the crypto users, they like crypto. That's what they want to trade. So some people will trade these products or use them,
Mhm.
but it will be a small minority of already kind of small markets. And in crypto, we always have like 20 platforms for 5 users. You know what I mean? And RWA, I think, has this problem in which like we have so much industry focus on this product, but there is not that many users that really benefit from it or would use it.
That's an interesting take. So you say that RWA, the people that will trade RWAs are not the same people that trade crypto.
It's a small subsection.
Yeah.
And the problem is that we have we have 50 teams building RWA products. You know what I
Yeah.
mean? And the users is not that many. So it's like all these
Yeah.
platforms will struggle to get any kind of meaningful revenue, right? Because there is not that many users. I think you can make the same parallel for options trading, right? Like how
Yeah.
many
Yeah.
decentralized options do you see? Like there is so many, but there is not options traders in crypto. Like there are not that many.
Mhm.
So it's like at some point there is like more products than users, and it's like
Yeah.
okay, so you'll fight for 2 users and that's it.
Unless they onboard new ones. If.
Yes, yeah, but the same problem I see is that RWA are better served from other apps, financial apps that already exist in the market. And the same thing for options. Like if you trade options, you don't want to trade crypto necessarily. You want to trade like you trade on Robinhood or eToro or whatever. Like so, why would you join like the centralized crypto exchange? Like it's different. Like it's
Mm.
and perpetual futures are better. That's it. They're
Sure.
more fun. Yeah.
Okay. I have the last question for you at this point, which is what's the most important lesson you've learned throughout these years?
It's a good question. I would say the biggest lesson would be to never take any market for granted. Like I think crypto as a way of like finding product market fit where you least expect it. If you think about what was the state of Solana after the crash of FTX, right? Like like Robinhood users were forced to sell Solana because they delisted it, right? Like I think it went down to like $10 or something. Eight, like imagine. Like people were laughing at Solana conferences, like Ethereum people were laughing at Solana conferences, right? Because they were like, okay, like why are you even doing conferences? Like it's over, right? And you start believing it, right? Because people are like, okay, the price is down that much. But then like this industry has a specific type of resilience which I haven't seen anywhere else. So some strong communities can actually like survive a lot, right? If you think like Bitcoin is a good example, right? So you don't take anything for granted. And if I took Solana more seriously when the market was depressing, but actually the community was starting to rebuild and those kind of things, I think our exchange would have been better positioned to take advantage of this kind of on-chain activity. But we were a bit too late. And when we realized that something was moving, the industry was already had already caught up with a lot of products, the centralized exchanges, all those kind of things. So I think, that's the biggest lesson.
It reminded me of the Ring of King Solomon. This too shall pass.
Yeah, it's
For
a
the
good,
good
it's
times,
good
for
for
the bad
crypto.
times. Yeah, same here. Okay, Federico, thank you for joining me today.
Yeah, thank you, Hayek. Good conversation.
Thank you for joining us today. Leave any questions for Federico in the comments below, and I'll see you in the next episode.